Welcome to the first installation by Nuance Technical Analysis. In this video, I will be reviewing Tesla stock. Currently, it is Monday, February 17th, and the New York Stock Exchange is closed for President's Day and will be open tomorrow, Tuesday, February 18th, for a short trading week. Currently, Tesla has been in this local downtrend ever since the previous all-time high in December. Since we've entered this downtrend, since making that all-time high, we have bounced here around 325-ish, and structurally you can see there's a little support from this consolidation over here in November, but the major reason why I think we're bouncing here is because that is where the current 100-day SMA is. Now that provides some confluence for that area, but I do not believe that this current downtrend is over quite yet. I think we will see a little bit of a bounce short term, at least reclaiming the 20-day simple moving average. Now if we open up some of these channels that I have previously drawn out here, you could argue that this is a bull flag right here, but I believe that we are only going to test the top of this channel, maybe wick outside of it, and then come back down to not the 100-day SMA, but the 200-day SMA. Well, obviously, I don't think this is going to happen within a couple of trading days. I believe this is going to happen over probably 2 weeks. The 200-day SMA will have entered this channel and potentially be at the bottom range of it, where we will build our support and potentially move higher. Could argue that this is a little bit of a bear flag. Now, this would have to happen within the next 2, maybe three trading days. If we come up here to around the 20-day SMA, to 380, 390, potentially even 400s, and we wick off of here, giving us our retest of what I would call this bear flag, then I believe that would confirm a move down to test the bottom of this channel. Another reason why I think this area on the chart is quite heavy for buyers to push through is just from previous market structure. If we look back to the previous all-time highs back in October 2021, you could see that this was an area in which buyers just could not push through. The sellers ended up regaining control. While price did bounce off of the 100-day simple moving average, I don't think that the 100-day simple moving average is a great place for price to build support on Tesla. As we can see in the past, we have bounced off of the 100-day simple average, moving average, only to come back up and have failed beneath it. I do believe that the 200-day simple moving average is a much better reference point. This current area of support, as I've said, did bounce off of the 100-day simple moving average, but I don't think there's a whole lot of confluence with previous market structure. The only thing I could really see is this area of consolidation that happened back in November of 2024. If we extend that rectangle back further, really doesn't match up with too much. You could say, maybe this area here or all of that mess over there, but I don't really think so. Another reason why I think price will eventually have to come back, test the bottom of this channel, as well as the 200-day simple moving average, is this right here, the all-time high back in January of 2021, seems to be an area that price has respected for quite a while. Now, mainly it's just been, this breakout here, only for it to fail back under, come back up, test the 200-day, and then fail under again. Tested it here back in summer of 2023, failed back under, and then finally in our current trend, or more recent times, the most recent breakout, we still haven't came back and retested this area here. I would assume that this would be a great area to establish a long position, whether that be shares or leaps, but until we get a retest of this area, I'm not confident in staying long in Tesla. Now, this is just an area, some people would call it supply, I believe. I don't really believe in the whole supply and demand. I just like resistance and support. We could easily wake up over this, maybe even come up to, you know, 460s. I don't think we'll double top here if we do fail back down, but you know, 450s, 460s, 440s if we pull up, not that one, but this one. Clear off some of this stuff so it's a little easier to see. Say if we didn't get this failure around the 20-day simple moving average, say we'd probably get a failure somewhere within this area, the golden pocket, from 426 to 453, even up to here around 470-ish. I really do not see Tesla making a huge move upwards without getting this mean reversion to the 200-day simple moving average. It's just every time price has gone too far away from that 200-day simple moving average, it's eventually came back and tested it. Now, it does not have to come back all the way down here to test it, and if we do get that pop up to this area, you know, the 200-day, it might be over here, and it will just be a break and a retest of this descending channel. And it is entirely possible that we just stay sideways until the 200-day simple moving average catches up to it. But this is just what I see as likely. Currently, this range, it's not very valid. There's been a lot of high and lows for this to have been created. Technically, if this were to be the high of your range, the only low you could really look at for that would be this low right here. And obviously we already invalidated that with this move lower. So until we get a break above, I'd say probably this rectangle, if we get a move higher above 413-ish, then I would say this range is back in play. The range that we should currently be looking at would be this one. This is the last significant high before this move lower. Now, I believe this provides a lot of confluence with the idea that we're going to reclaim wick above the 20-day simple moving average into this 383 to, let's just call it 400-ish area before we move back lower. If astrology is your thing, if we move over to the 1 hour chart, it's easier to see here, but you can see a little head and shoulder action going on here with your left, your head, and your right shoulder. And that's already played out. If we draw the move from the top down to the neckline, which I would say is about here, the measure move would be down to exactly where we bounced. And that is another reason why I believe we're going to have a little relief bounce before we see any more move downwards, is that this whole, like I said, if you believe in this kind of thing, this is already played out. Now we're either going to get a retest of the neckline because we already broke out of it. You could argue that this right here would be the retest of the neckline, but we didn't quite make it. And I'm one to believe that retests always happen a little further out, not necessarily right away, especially on these smaller time frames, because I mean, yeah, technically it did, but it's not that significant in my opinion. This really is kind of your area where if we do break out of this channel and we break further above, I would say that, you know, this retracement is in play. I think this is going to be our area where we fail back under, and the question then would be, are we going to fail back under and retest this structure here, or are we going to fail back beneath it and then come back up and do a little action like that?